Hyperinflation in America is increasingly becoming a legitimate, and scary, concern for many investors, as you already know. My name is Mr. Smart Money and I will tell you all about profiting from inflation. Be sure to listen all the way to the end to avoid misunderstanding. It's been a long time since we've had to worry about inflation. We've maintained it at around 2%, and that is just perfect. Some investors see inflation on the horizon, such as Ray Dalio, Charlie Munger, and Michael Burry. Munger noted that, if you print too much money, you get something like Venezuela, an inflation-ravaged country. Michael Burry said that history isn't useless. In the 1970s, American inflation has gone up significantly. Inflation pressures are rising because the economy is recovering. And well-known investors from around the world have publicly warned of inflation. Your results also indicate that inflation is a concern, and in the not-so-distant future, I will present you with the survey. What we're going to focus on, however, is how you can benefit from inflation. Okay, here's the deal. A large number of people will die. You need to know how to prepare. So, let's look at these warning signals. Also, the repercussions of all this money printing are being overlooked. A massive global outbreak necessitated more money to be donated. The government acted as was necessary. They sent money to the people they found. Entities provided trillions of dollars to struggling businesses, as well as those that needed immediate cash. More than $500 billion was spent on tax cuts for people who were working. Billions of dollars each into healthcare, and the government budgeted must have come from somewhere. And basically, money grows on trees, the Federal Reserve prints it, creates it out of thin air, and all of our problems are magically solved. Anyone who understands sound economic principles will know that this isn't the case. Printing trillions of dollars comes with the associated problems of inflation. When you give people free money, they have more money to spend on goods, which increases demand. When demand increases, prices rise. According to Charlie Munger, if this continues, you'll end up like Venezuela, which has experienced hyperinflation, as a symptom of the problem. The aging world population. Clearly, there were more young people in the 1970s than retirees. In the US in the 1970s, there were almost twice as many young people as seniors. The ratio of working-age people to retirees is comparable to that of the 1970s in the UK. Today, the same story can be found in all developed economies, where there are more retirees than younger people. Instead of growing, China's working-age population is slightly decreasing. Eastern Europe has the same story. Africa is not the only continent that has not expressed this. What a bummer this whole decline thing is. Labor costs go up because the amount of goods you can produce is lower. Increasing the prices of goods and services is also referred to as inflation. Now, these are just some of the possible causes of future inflation. However, the real question is, how can we make money from inflationary times, or at the very least, not lose money, because most of us have not experienced a high level of inflation before this time. Last time we saw high inflation was in the 1980s. Inflation is rising in Georgia. There are several strong options to consider here. This is something I'm doing personally. Cooper, I am taking on substantial debt to acquire real estate, about $375,000 worth. So show me the math here. As your dollar loses value, the worst asset class to be in during inflationary environments is cash. How is cash calculated? Debt. Therefore, instead of inflation eroding your cash, it erodes your debt. When prices go up due to inflation, real estate provides an advantage. It begins to rise. Housing prices rise along with inflation, which works in favor of real estate, but rental income also increases. Thus, the value of your home rises, and your rental payments rise. With this investment, you get rich in multiple ways. If you plan carefully, you can earn a large profit from it. Now you can either buy real estate, obviously, or if you don't have the money for that, a real estate investment trust that will invest in real estate for you, and you can get into these assets at much lower prices, like the examples provided here. But real estate is not the only asset which benefits from inflation. Let me elucidate. During inflationary periods, investors' cash loses value. And thus, no one wants to hold currency, and they think, what asset class has limited supply and cannot be diluted in value? And of course, gold is an answer. When investors see inflation, they rush to gold, which increases in price. And history shows this, too. The 1970s had the highest inflation rate. It ranged from 5 to 15%. As for the price of gold, what happened? It went from around $250 to over $2,000. When prices rise rapidly, gold is a strong asset, but you want to buy it when it is still cheap. And, yes, I own gold. And finally, since an increase in inflation will attract investors to the cryptocurrency market, Bitcoin is the way to go. We do have the logic, as Bitcoin has only been around for 10 years. Thus, inflation. The crux of the matter is that your dollar is losing value, it is being printed and printed for you, and diluted to become less effective. With Bitcoin, there can be no dilution because the total supply of Bitcoin is limited to 21 million people. As your dollar gets devalued and diluted, as a result, people are rushing to use alternative currencies. This is another. In my opinion, there is a strong chance that Bitcoin will succeed. Hyperinflation happens if we have real estate, gold, and Bitcoin. These assets are well-performing assets in inflationary environments. Also, keep in mind the stocks that perform here, and those that don't. To prove that, we're going to use Warren Buffett, the greatest investor of all time. In the past, he's often discussed stocks and inflation. When it comes to inflationary times, you should concentrate on stocks. They have three main attributes. Keep a note of these. The ability to produce cash, not to spend it. Two companies can raise their prices to keep up with inflation. In short, it's buying companies that have the ability to accommodate large dollar volume increases in business, even a stock like Coca-Cola. Investing for the long term will perform better in inflationary times because they are companies that produce a lot of cash flow or stock, such as the Sanderson Farm. Inflation can be raised along with the price of chicken, and there is a good amount of cash flow. In that case, you should favor these types of stocks over others. So, bear in mind that high inflation can be disastrous for your finances. In Thomas Sowell's words, hyperinflation can take everything you've worked for and more, but it doesn't have to be this way. Investing smartly keeps inflation from robbing you of your money. You can profit, while most lose, by making wise investments and buying stocks in gold and real estate, and maybe some Bitcoin. So there you have it. Thank you for listening, and click on our next video for even more interesting economic and financial insight. Watch all of our videos, we take pride in bringing you the very best. You may not agree with me completely, so let me know in the comments. I am Mr. Smart Money, reminding you to stay smart with your money. And to be excellent to each other. Watch our next video right now. I will see you in our next video.